All right, y'all, how's it going today? So today I want to go over one of my many options trading strategies with you guys. And this one is one, that I consider what's called an income trade, right? And I know other people have heard that term before or used that term, but to me, what an income trade is basically, it's a trade I can put on and I don't have to constantly babysit it or make adjustments to it constantly. Okay. This isn't like, I'm scalping, long calls or long puts or something like that, and I got to watch it like a hawk. It's not like that. It's like I put it on and I want it to play out, patiently over, the course of a week or maybe a little bit longer, maybe 4 weeks. I have my OCO order in, my limit order set, and it's a set it and forget it, right? It either hits or it doesn't, right? So, again, it's a trade I can employ on a somewhat consistent basis every 1 to 4 weeks, okay? And again, you just let it sit for a set period of time until that target hits, okay? So, there's a few different trades that I consider under this category of, an income trade by my standards. The first one, and the one that I'm going to go over today, I'll go over other ones in a different video, but the first one that I'm going over today and the main one that I use, I use a number of different ones, but this is probably one that I use the most frequently, especially here in this past year. And it's a form of a diagonal spread, okay? So what exactly is a diagonal spread? If you're not familiar, you're basically selling a near-term option at one strike, and then you're buying a longer-term option at a different strike, okay? And I'll give you guys an example here in a minute. So how do I set up this diagonal spread, right? So basically what I'm doing is, I have my equity that I'm looking at, and I'm selling an at-the-money or slightly out-of-the-money put, okay? And that's if it's bullish, right? If I'm bullish on the name, I'm selling an at-the-money put or slightly out-of-the-money put. If I'm bearish, it would end up being a call. And I'll go over that here in a little bit. And it's usually 1 to 2 weeks out, okay? And I'm buying a longer-term put or call if we're doing the bearish one, far out of the money and about 3 to 4 months out, okay? This is just a criteria that I use, okay? And then it's usually between 15 to 20 delta strikes, okay? And you can find that in the options chain, okay? So for example, Tesla, currently trading at about 167.82, okay, as of 12/12, okay? So for this particular trade, if I was bullish on Tesla, I would be selling the 165 put, so it's just slightly out of the money, okay, for this Friday, 12/16. I could go 12/23. Also, I would collect a little bit more premium, okay? And then I would be buying the 130 puts for mid-March, okay? Because that's about, 3-4 months away. Okay, and that one is an 18 delta, okay? So when do you put this on, okay? Or how does it make money, okay? So number one, you still need to analyze for a good entry, okay? And I'm not going to go over any of that today. That's something that, you have to figure out yourself, or I can go over in a video at a different time, right? But you still have to find a good entry for these. This isn't like I can just pick any stock at any time, and it's going to make me money, right? No, it still has to have a set, criteria for me to enter, right? So my assumption needs to be neutral to bullish before entering this position, right? So I'm at least either expecting this name to chop around or to go up, okay? So basically, you make money by the stock chopping around or moving up from the high theta decay on the near-term option, okay, which decays much faster than the far-dated option. That's how this trade works, okay? Now, how do I manage this trade? Okay, what's my exit plan? All right. So generally speaking, my profit target is about half of the short option premium. Okay, so for the above example, the Tesla short put premium was about 5.00. So I would look for about $250 profit per lot on each for most positions, right? And then I can hold a few to run a little bit longer and try to be greedy and collect that max profit, but don't typically advise that. And then, on the loss side of things, you can exit at a loss for twice the intended target or the total premium of the short option. So in this example, it would be 500, right? So if this trade really goes against me, I'm going to consider getting out at a loss at 500, right? Now, the good thing about this stock this setup is there's a lot of flexibility with it as well. It is a 1 to 2, in that example, it's a 1 to 2 risk reward ratio, right? So as long as this works out 68% of the time or more, then this trade makes money over time, right? And this trade really is, over the last year or two, is about a 75 to 80% success rate, okay? So that risk reward ratio works out, right? Now, I kind of skew that risk reward ratio in my favor too, because you can, number one, you can roll that short put, right? So you can just roll it out for a later date, right? Or you can roll it up, right? So you can close that short put out and then roll up into a higher strike, right? Or you can just close the whole thing out indefinitely, right? Now, on to the next bullet point is the other technique I employ is you simply just hold on to the short put and then you let yourself get assigned, okay? Obviously, this is risky, and, if you don't know what you're doing, not something that you should be trying for the first time, right? And then you can close the long put out for a profit, okay? And obviously this should be a level you wouldn't mind buying shares from anyway, right? So, something to keep in mind also when you're looking to enter this trade, okay? Then after you are signed, you can simply just hold the shares or look for an entry to sell calls against those shares to collect even more premium, right? Okay, so now not only did you get assigned on the shares at a cheaper price than if you would have bought them outright at the time you entered this trade, you also made an extra profit on the long put, and now you can collect extra premium via short calls. Okay, so you're really lowering your cost basis on this particular stock. Okay, so it's a pretty cool setup. And, next part, can I do this on trades I'm bearish on? Yes, absolutely. It's simply just the opposite setup, right? So you would be selling at the money to slightly out of the money calls, near term 1 to 2 weeks out, okay? And then buying out of the money calls 3 to 4 months out, 15 to 20 deltas, okay? So for Tesla, you would be selling the 170 strike calls for this Friday, 12/16, and then you would be buying the 230 calls for March 17th. Okay. The exit strategy premium on the short call is about $6 or 6.28. So I'd be looking to get out at about $300 profit. Okay. So closing order would be 150 debit. If the credit you received in the example above, I think this was for a 150 credit. Okay. Where are we at? Okay. Yeah. So your limit order would be set at $300 profit. So it would be at a 150 debit, right? So pretty simple. Or you can close out for a loss for $600. At which point, then it would be a 750 credits that you'd be closing it out at a loss for. Okay. On the bearish setup, I don't usually mess around with getting assigned short shares. I just, I don't like to do that. So I usually just simply close it out for a loss. Okay. And then the other part is, what if I just think the stock goes sideways, right? I don't have a conviction up or down. In fact, I'm pretty, convicted it just goes sideways, okay? So you can basically do both of the examples above, okay, using the call and the put side, okay? What this does is it widens your break evens both above and below. So you will make more money if the stock stays range bound. Similar setup to an iron condor, okay? But, squeeze a little bit extra money out of it than an iron condor. So let's head over here. So I'm going to show you that first setup. I'm going to do this on Robinhood because I actually like their mobile risk profile. So Tesla's currently at, you can see right there in the middle, at 168 in after hours. So let's see how this looks. Oh, so add the 165 short put. And then we'll go over to March, and we're looking at the 130 put. Okay, so this is a 2-option order. Robinhood doesn't know what the hell this is called, but this trade costs a 235 debit. Okay, so I wish this was more zoomed in here. Okay, so right now the max profit is at 165 for Tesla. Okay, if it goes up to 211, which I don't think it's going to go that high. That something crazy would have to happen. This is CPI week, so stranger things have happened, but I just don't see that happening. But let's say it goes up to 200. I'm going to make $82 profit on this. Not bad. The lower break even is 157. Pretty strong support there, so I feel good about this trade here. You can see why it's a good idea to kind of close this out for a strict loss because, again, I don't see Tesla falling this far. But if Tesla fell to, say, $100, your loss would be $3,180, right? So, this is why I also say, you want to be careful if you're accepting assignment on the shares, right? Because you should have a level in mind that you're like, I need to get out of this trade because it's really likely that it goes to even lower levels, okay? So if you're going to do this trade and you're new to, this particular strategy, or you're new to, if you're just a newer trader, I would not mess around with, getting assigned or anything like that. I would just take your target profit or get out for the loss that you intended when you first got in, okay? So, in this one, so actually this one is the sell put premium is 500, right? So I would actually be looking for about $250 profit. So, and that happens if you held this to expiration, which I'm likely not going to do. That means if it's below 184 or above 160-ish, which is a pretty wide range, okay? So in that wide range, I'm going to hit my target, okay? Let's take a look on the call side. So what do we say? The 170, okay? And then for March, this is the 230s. Okay, jeez. All right, there we go. All right, so this one is actually for a credit, okay? No break even on the downside, so that's cool. So this one, about 500, yeah, so I'll be looking for about 200 on this as well. Now this one, I would not take this trade right now with CPI because Tesla could easily rip towards 200, and then you're looking at a $1,600 loss when I'm only looking to collect 250 originally. So this is not a trade I would set up here. I'd actually be maybe considering doing a bullish side with the puts here, because this is a level on Tesla that I kind of like, but I also think it could hit 150 too. So kind of staying away from Tesla here, but you get my point. So about 173-ish on the upside is my upper limit where I'm going to make $250, and then as low as 150 area, I'm going to make $250. Okay, so again, you can see there's a pretty wide range on this. Now let's see what this looks like if I add both the call and the put side. All right. So this, again, this kind of turns it into like an iron condor type setup. So, the break evens now are 154 on the downside and 180 on the upside. Okay. So not bad. And then again, this is just, so since the credit I'm collecting is about 1,000, I'm looking to make 500 on this. So realistically, I'm going to get that between 159, which is a good level of support, and 175 on the upside. So, again, not a trade I would take here, but, there are times where I do think that this is a good setup where I'm taking both the call and the put side, okay? So, you just have to ask yourself, what's your assumption on this particular stock, right? Do you think it's going to go up, or do you think it's going to drop sideways? If you think it's going to trade sideways possibly or go up, then you want to do this with all the puts, right? And then if you think it's going to trade sideways or go down, then you want to trade this with all calls, right? And then if you think it's just going to straight go sideways, then you can do both the calls and the puts like we had talked about earlier, okay? So, again, this isn't something that you just crank out time and time again all year round on one stock, right? You have to find the right entry for it, right? You have to find the right setup for it, okay? So, hopefully it's pretty clear to you guys. If you have any questions, feel free to let me know in the chat, or you can comment here on YouTube. But that's all I have for you guys tonight. I'll try to do more of these videos here in the future. Anyone has any special requests on any other particular strategies that I employ, again, feel free to let me know in the comment section or in the chat room. All right. Have a good night, guys.